This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to be joined by Rick Kess. Rick is a partner at RSM, one of the brightest person that follows healthcare and private equity. Rick, take it away. Tell us, are there a couple trends you're watching currently in private equity? Is there going to be a rebound in deal activity? What are you seeing out there?
Yeah, Scott, it's interesting. We're seeing a pickup on sell side opportunities, which obviously is a good indication that the pipeline's coming back. An interesting common theme that I'm seeing with those is a lot of them are really focused on risk-bearing organizations, whether they're actually writing health insurance, some of them, or if they are in somehow one way or the other taking on risk related to payment, whether it's through like an ACO model or some other unique reimbursement structure. So I definitely think, we're seeing a big pickup with sell side opportunities kind of focused again on those risk bearing entities within healthcare. So yeah, we're a little optimistic that deal volume will pick up in the almost over the second quarter, but the third and fourth quarter of 2023 here.
Thank you very, very much. And will pricing be down as interest rates go up? Any sense of what you expect there?
Yeah, I mean, we have been trying to condition our clients to think through what pricing means to them. And obviously their investment bankers are a big critical part of that conversation. And just thinking about, do we have to reset expectations or are we able to kind of, really look for the multiples that we thought we were going to? And I think what we're seeing is that, probably a common theme others have told you is, those really high quality assets, the margin, the multiples are still pretty favorable to the seller's perspective. I think the assets where you're starting to see a bit of a, some sort of issue, whether it's because, maybe they're, running into some sort of financial trouble on their own, or maybe revenues are declining or something like that. In those circumstances, maybe they'll have to kind of reconsider what their expectations were around multiples. But, again, those really high performing, well-managed organizations, I don't know that we're going to see a huge decline in value there.
Fascinating. What about the debt market? Are the debt markets open? What does that look like? What are you seeing there?
Probably kind of a similar story. I think organizations that have, a strong balance sheet and aren't, extremely leveraged already, those are organizations that are able to find opportunities. I think the over-leveraged organizations are pretty stuck, are really trying to work hard to find opportunities and really figure out how they're going to finance their expansions or even refinance because of, covenant violations or other things. So yeah, I think kind of the story maybe is, it's good to be good and it's not so good to be not so good.
No, fascinating. And talk a little bit about some of the big investment banks have been doing some layoffs of bankers and so forth. Is that short-sighted? Do you see that sort of that it will turn back around and that's sort of short-sighted to let go of some of your great talent?
Well, it depends. It depends on, what the overall structure and thought is behind it. If it's to, consistently kind of churn, because of performance or otherwise, kind of your overall employment base, companies have been doing that for a very long time. Very successful companies have been doing that for a long time to just kind of take the bottom 10% of their people and turn them over, and try to help them find new opportunities outside the bank or, wherever they may be, and, kind of help them, land on their feet and then find new talent to bring in to see if they can kind of find the next rising star. So, I think some of that is happening now. I think between 2020 and 2023, you saw perhaps, that not occurring just because growth was there, opportunities were there, and, a lot of people were unsure of the future. And now I think we're kind of back to this time where, hey, maybe some of your voluntary turnover numbers are down a little bit. You're going to have to start, kind of just churning that on your own. Otherwise, you sometimes keep people around for maybe a little longer than they really need to be there.
No, a fascinating perspective. It'll be interesting to see how this plays out this year compared to 2021, 2022, a decent amount slower. I saw a recent report that deal activity is down by $1 trillion this year, or something expected like that, which is seems like a lot of money. And hopefully it starts to rebound, and it'll be fascinating to watch as things heighten again, and as interest rates sort of at least get close to what seems like a peak. Rick, anything else you wanted to share with our listeners today?
Yeah, the other thing I'd probably say that I'm starting to see maybe a slight indication of a theme is organizations doing divestitures. So I'd say a lot of the deal activity that we're seeing, they're saying, hey, we're in these 3 markets or these 3 or 4 different business lines, and we really want to get out of this particular business line. So let's go to market and try to divest that part of our business so that we can kind of focus on the core. So I think for private equity organizations out there, they probably have an opportunity to think about what pieces of businesses that are interesting to them that they could kind of peel out of maybe a larger organization, even publicly traded companies that maybe are looking to spin off this segment. So I think there's, seems to be a little bit of a trend there that we're seeing a little bit more activity in those larger organizations really kind of hunkering in on their core mission and core focus and thinking about selling off some of their ancillary businesses that they once thought were potentially opportunities to grow.
Thank you very, very much. What a fascinating situation. Rick, again, thank you for joining us as always on the Becker Private Equity Business Podcast. I always learn something talking to you, so thank you so much for joining us. We'll get a chance to visit with you again soon. Thank you very much.
Thanks, Scott.